Welcome to the first part of our ultimate video guide to the disability tax credit. Whether you're applying for yourself, a child, or an elderly parent, understanding the rules is the first step to success. This video covers the who and the what. For a more comprehensive look at the fine print, you can read our full guide on our website. The link is in the description. Let's start with the basics. What is the DTC? The Disability Tax Credit, or DTC, is a non-refundable tax credit. That's a fancy way of saying it reduces the amount of income tax you owe to the government. It's designed to help offset the extra costs that come with living with a disability. Crucial point: even if you have no income and don't pay taxes, you should still apply. Why? Because the DTC is the gateway to other major benefits like the RDSP, the Child Disability Benefit, and the Canada Disability Benefit. If you don't have the DTC, you can't get those other payments. Let's look at the numbers for 2026, for example. The base amount. For adults, the federal disability amount is $10,138. The supplemental amount. If the person with the disability is under 18, there is an additional supplement of up to $5,914. When you apply these credits to your tax return, they can result in thousands of dollars in tax savings or refunds every year. To qualify for the DTC in 2026, you must meet 3 strict criteria. Prolonged impairment. Your condition must have lasted or be expected to last for a continuous period of at least 12 months. Severe restriction. You must be markedly restricted in your daily life. Certified. A medical practitioner must certify that your impairment meets the CRA's definitions on Form T2201. This is where most people get confused. Being markedly restricted means that even with therapy, medication, and devices, you are unable to perform a basic activity of daily living, or it takes you 3 times longer than someone of the same age without the impairment. And here's the kicker. This must be the case all or substantially all of the time, which the CRA generally interprets as 90% of the time or more. It's not about your bad days, it's about your everyday reality. The CRA breaks eligibility down into specific categories. For physical impairments, this includes walking. Can you walk 100 meters, 1 city block, without stopping to rest? Dressing and feeding. Can you dress yourself or prepare food independently? Eliminating. Do you have significant issues with bowel or bladder functions? Hearing, speaking, or vision. Are you considered legally blind or severely hearing impaired? Life-sustaining therapy. Do you spend at least 14 hours a week on therapy like dialysis or insulin pumping? For mental and psychological impairments, we look at adaptive functioning. Can you live independently or manage personal hygiene? Memory and problem solving. Can you remember basic info or identify everyday risks? Goal setting and judgment. Can you make decisions about your own welfare or recognize danger? What if you aren't 90% restricted in just one category? You might still qualify under the cumulative effect. If you have significant limitations in 2 or more categories, for example, you move slowly and you have memory issues, the CRA can combine them. If the combined impact is equal to being markedly restricted in one category, you are eligible. This is a vital path for people with complex or multi-layered conditions. If this sounds complicated, that's because it is. Determining if you meet the 3 times longer rule or the cumulative effect is exactly why so many Canadians get denied when they apply on their own. At Disability Credit Canada, we help you determine your eligibility before you even talk to your doctor. We know the 2026 criteria inside and out. We help you frame your daily struggles in the specific language the CRA needs to hear. We take the guesswork out of the application so you don't waste months waiting for a denial letter. Best of all, we offer a free assessment to see if you qualify. That wraps up Module 1. You now know the definitions of severe, prolonged, and markedly restricted. In our next module, we're going to get practical. We'll show you exactly how to fill out Form T2201 and which medical practitioners are allowed to sign off on your application. I'll see you in Module 2. Now that we've covered who is eligible, it's time to tackle the paperwork. The disability tax credit application is called Form T2201. It might look intimidating, but it's essentially just two parts. Part A for you and Part B for your doctor. In this module, we're going to walk through the digital and paper options, who can sign your forms, and what to do once the Send button is clicked. In 2026, you have two ways to apply. Option 1, the digital application. This is the fastest method. You log into your CRA My account, click Apply for DTC, and fill out Part A online. The system will give you a reference number. You give that number to your doctor, they log into their own portal, and the two halves of your application link up instantly. Option 2, the paper form. You can download the PDF from the CRA website and print it. This is still a great option if you prefer to review everything with your doctor in person or if you don't have a CRA online account. Part A is simple, but there is $1 million box you cannot afford to miss. Section 1 and 2. Basic info for the person with the disability and the supporting family member. Section 3. The adjustment request. Check this box. It gives the CRA permission to automatically adjust your tax returns for the last 10 years. If you don't check this, you might get approved for the credit, but won't get the retroactive refund check without filing even more paperwork later. Let the CRA do the work for you. Check the box. Part B is the medical section. Your doctor doesn't need to fill out every page, only the sections that apply to your specific disability. Critical tip. The CRA doesn't just want a diagnosis like diabetes or arthritis. They need the doctor to describe the functional impact. For example, instead of patient has COPD, the form should say, patient cannot walk 100 meters without stopping for 5 minutes to catch their breath. Functional detail is the difference between an approval and a denial. Most people think only a family doctor can sign the T2201. Actually, the CRA allows several types of professionals to certify Part B, depending on the impairment. Medical doctors and nurse practitioners can sign for all categories. Optometrists, for vision. Audiologists, for hearing. Occupational therapists or physiotherapists, for walking, feeding, and dressing. Psychologists, for mental functions. Speech-language pathologists, for speaking. If you're looking at these forms and thinking, I don't know which category I fit into, or my doctor is too busy to do this right, you aren't alone. This is where Disability Credit Canada comes in. We act as the bridge between you, your doctor, and the CRA. We review your medical history, determine which categories offer the highest chance of success, and we even provide your doctor with the correct functional language to ensure the form accurately reflects your life. We make sure Part A and Part B are perfect before they hit the CRA's desk. And remember, we only get paid if you get approved. If you want us to handle the paperwork, visit our website for a free consultation. Once your application is submitted, the waiting game begins. The CRA's current service standard is 8 weeks, though it can take up to 12 weeks during tax season. You can track the status in your CRA My account under Progress Tracker. Don't be alarmed if you see additional information requested. This is a common part of the process where the CRA sends a follow-up letter to your doctor. In Module 3, we're going to talk about the best part, the money. We'll calculate that 10-year refund and look at how the DTC unlocks the RDSP. See you there! Welcome back. In our previous modules, we covered the what and the how. Now, we're talking about the why. The disability tax credit isn't just a certificate, it's a financial engine. It can lead to massive retroactive refunds, monthly benefits, and long-term wealth building. Today, we're going to calculate the 10-year refund and look at the programs the DTC unlocks. A common mistake is thinking you can only claim the DTC if you have a high income. If you have income, you use the credit to lower your own taxes. If you have little or no income, you can transfer the unused portion of the credit to a supporting family member, like a spouse, parent, or even a child, who helped you with food, shelter, or clothing. This ensures that the family unit as a whole receives the financial support intended by the CRA. If your disability started years ago, the CRA allows you to backfile for up to 10 years. Because the credit amount is indexed, meaning it goes up every year, the math looks like this. In 2026, the federal base amount is $10,138. In 2016, it was $8,001. When you add up the federal and provincial portions over a decade, it's common for a single adult to receive a refund check between $15,000 and $25,000. If you are a parent of a child with a disability, that number can be even higher because of the supplemental amounts. This is money you've already paid in taxes that the government is returning to you. Once you have the DTC, you must open a Registered Disability Savings Plan, RDSP, if you are under 50. The government provides grants. They will match your contributions by up to 300%. Put in $1,500, and the government could add $3,500. Bonds. For low-income Canadians, the government will deposit up to $1,000 a year into the plan, even if you contribute $0. The lifetime limit for these grants and bonds is $90,000. It is quite literally the best savings vehicle in Canada. The DTC also triggers monthly cash flow. Child Disability Benefit, CDB. For parents, this can add over $280 per month per child to your CCB payments. Canada Disability Benefit, CDB. This is the new benefit for 2026 for working-age Canadians. If you qualify for the DTC and are low income, you could receive up to $200 extra every month. Canada Workers' Benefit Supplement. If you are working, you can claim an extra disability supplement of roughly $843 per year. Calculating 10 years of tax adjustments, navigating RDSP grants, and ensuring your provincial benefits aren't affected is a lot to handle. At Disability Credit Canada, this is our specialty. We don't just get you approved for the credit, we ensure your tax returns are adjusted correctly to maximize every penny of that retroactive refund. We've recovered millions for our clients, and we know exactly how to trigger the supplemental benefits you might not even know you're eligible for. If you want to ensure you are getting the absolute maximum from your DTC approval, let our experts do the math for you. Remember, no win, no fee. A final important note, the DTC is a federal credit. In almost every case, receiving a DTC refund or opening an RDSP will not reduce your provincial social assistance like ODSP or AISH. In fact, the RDSP is specifically protected so you can build wealth without losing your monthly support. Money in your pocket today and a savings plan for tomorrow. That is the power of the DTC. In our final module, we're going to cover the tough stuff. What to do if your application is denied, how to appeal, and the most common pitfalls to avoid. See you in Module 4. You've done the work, submitted the forms, and waited months, only to receive a letter from the CRA saying you've been denied. It is a frustrating moment, but here's the truth. A denial is often just the beginning of the conversation, not the end. In this final module, we're covering why applications get rejected, how to file a formal appeal, and how to turn a no into a yes. Most denials aren't because the applicant isn't disabled enough. They happen because of technicalities or a lack of specific information. The most common reasons include the diagnosis trap. Your doctor focused on your medical diagnosis. For example, patient has Crohn's, instead of your functional limitations. For example, patient requires 10 trips to the washroom daily, taking 4 hours total. The 90% rule. The CRA wasn't convinced the impairment affects you all or substantially all of the time. Inconsistent information. Your doctor's notes on the T2201 didn't match the information they provided in a follow-up clarification letter. Duration. The CRA doesn't believe the condition has lasted or will last for at least 12 months. If you are denied, your first option is a request for reconsideration. This is a second review where you send the CRA additional information they didn't have the first time. Don't just send the same form again. You need to provide new evidence such as more detailed letters from your medical practitioner, a personal daily impact diary showing exactly how much time tasks take, test results or specialist reports that emphasize your limitations, not just your diagnosis. If a second review fails, you can file a formal objection. You must do this within 90 days of the date on your notice of determination. This moves your file to the appeals branch, where a different CRA agent, one who hasn't seen your file before, will review it. This is a legal process, and it requires you to clearly explain why the original decision was factually or legally incorrect. Filing an appeal or an objection is where things get complicated. You're no longer just filling out a form, you're arguing a case against the government. This is exactly why Disability Credit Canada exists. If you've been denied, we review your denial letter and your medical records to find the gap in the evidence. We handle the appeals branch. We know the case law and the CRA's internal manuals. We speak their language. We take the stress away. You don't have to spend your energy fighting a bureaucracy. We do it for you. Remember, we work on a no-win, no-fee basis. If we take on your appeal and don't get you approved, you don't owe us anything. We only win when you win. Before we wrap up this guide, remember these 3 rules for success. Never assume the CRA knows your story. If it's not on the paper, it doesn't exist to them. Photocopy everything. If the CRA loses your form, you don't want to start from scratch. Be patient but persistent. The system moves slowly, but for those who qualify, the reward, the 10-year refund and the RDSP is worth the wait. We've covered everything from the 2026 base amounts to the complexities of the appeals process. But remember, this video is just a summary. Our website contains the full, deep dive ultimate resource guide with even more specific details for your condition. Don't leave your money and your future benefits on the table. Whether you do it yourself using our guide or let us handle it for you at DCCI, the important thing is that you apply. Thanks for watching this series. If you found it helpful, share it with a friend or family member who could use the support. We'll see you next time.